Life insurance. What's the real scoop here? I hear a lot of TikTok videos and people talking about life insurance, this or that, or bank on yourself. There's so many different things that people talk about. And we're coming up on Life Insurance Month. And obviously, if you're a Disney cast member or an employee at pretty much any firm, they offer life insurance. And so, what's the real scoop on life insurance? So let's talk about that. But one story, a real story that I've heard told from a friend of mine about a widow, a young widow. Her husband was working and trying to make a living, trying to make ends meet. She talked about how they had talked about getting life insurance, but he was kind of up and coming in his career and was trying to get out of debt, trying to do right financially, and decided not to get life insurance. And unfortunately, not too long after that decision, he ended up passing away. I think it was a heart attack in his late 30s, and so left his widow and his kids with no real benefit. So she had to pretty much get back in the saddle and get back to work. And thankfully, her family was able to help out and all of that. But it's a story that you may have heard from time to time, some variation of that. And unfortunately, it is a reality. Life is not guaranteed. Any of us can go at any moment, and so life insurance, in essence, is able to provide a benefit for your family should something happen to you. Um, it can be an emotional thing, and unfortunately, there's a lot of people out there that are trying to position life insurance in all different sorts of ways that really are not what the tool is designed for, mainly because there are incentives involved for them to be able to sell life insurance. I do not sell life insurance myself, but I, of course, am a fiduciary financial planner, and every financial plan, life insurance is at least a consideration for that. And so, if you're a Disney cast member, you're thinking about life insurance, open enrollment is coming up here over the next few weeks. What should you consider? I've got a few things to talk through. First, what type of insurance, life insurance, should you consider getting? Uh, Through the employer, it is generally what's called annual renewable term. So, in essence, what that means is every year that you're enrolling into life insurance, that cost is rising every year. It's not a locked in price for 5 years or 10 years or 20 years or 30 years. That cost can adjust every year. So hence the name annual renewable. And when you're buying it through your company, generally it's going to come at a better cost, at least during your younger years. Now, if you're getting up there in age, maybe in your 40s, 50s, or 60s, and you still think life insurance is right for you to have, it may be worth looking outside of your company plan for some sort of term insurance because of the fact that the group plan is ensuring the least healthy amongst your peer group. And so as the population gets older, generally those costs tend to start to increase where their cost savings that you might have originally in a group plan may no longer be there later. So if you have access to a group plan, those are generally a great tool to have. You have to ask yourself, are you going to be with that company forever? Is there a possibility of you not being with the company either through layoff or through wanting to change jobs? And the risk with that is if you change jobs and your new company does not offer insurance, or your maybe life has changed, the ability to qualify for insurance maybe has changed because of your health circumstances and all of that. So there's some risks there to consider when you think about using the group policy versus maybe buying your own term insurance policy. Some other life insurance policies that are generally talked about are universal life or whole life. Both of those are have typically larger premiums associated with them because part of the premium would go to a cash value account that would earn interest, hopefully, and part of that would go towards the cost of insurance. The difference between a universal life and a whole life policy is the universal life policy can change the terms of the agreement and sometimes there's a time frame on payment. So maybe you only pay that for 10 or 20 years versus your whole life. But the cost of insurance can change, interest rates can change in that. So some of the variables can change from what you originally are quoted to what you may actually get down the road. Now, it's sometimes hard for those companies to change that because of the regulation and within the insurance industry, but it's still a possibility nonetheless. Most people do not need the universal or whole life policy. Generally, you only need those types of policies as if if you want to guarantee some sort of benefit over a longer term time frame than what a term policy is able to offer. A term policy, usually that's a 10-year or 20-year or 30-year period. And the best case for everybody is that you never use it. So the insurance company is able to collect their premiums and you don't die. And that's great. So it's generally a lot more cost effective to use a term policy rather than a universal life or a whole life policy. The proponents of a whole life or universal policy are going to come and say, well, the cash value it's going to be invested, and you're going to be able to earn all this earnings more than what you're going to get in cash, or even maybe better than what you're going to get in the stock market, or the volatility, or what have you. The fact is that a lot of those policies come with pretty hefty commissions, so it might be 7 to 10 years before you actually see any positive return, if ever, on those, depending on how it's structured. So buyer beware with those types of policies. So the first thing to consider is, what type of insurance are you going to use? Are you going to use a company policy, a term policy, or some sort of other whole life, universal life type product? Secondarily is, how much do you need? How much insurance do you need? I think of this in two ways. One is more of a specific use case with the insurance, very kind of practical thinking. See this a lot with those quote unquote power couples where maybe both spouses are working in fairly high income earning careers. They may choose to just have enough coverage to pay off any debts, cover any future responsibilities, kids' college, marriages, things of that nature, and maybe a few years of runway for a transition period, because obviously if you've just lost your spouse, you're going to be a wreck for a while, most likely. And so having some time to be able to not worry about paying bills is great, but it's not a lifetime setup. I've seen other spouses, other families, that they do want the surviving spouse to basically be set up for life. So that's where you're going to have enough to pay off those debts, but then also have enough assets there to be able to create an income stream off of for that spouse to live for the rest of their life. So that's going to be substantially more than if you're just covering kind of specific use cases there. So determining how much you need starts with that conversation with you and your spouse of what happens if something happens to you, and what's going to be expected from the surviving spouse. And so, fun conversation, right? But it's a good conversation nonetheless to have, to get some clarity around what your spouse is expecting should something happen to you. And then that would then help you determine how much life insurance you might need. Another factor, the third factor, is the cost. If you're going term insurance route, you can get quotes from multiple different agencies. You can use an independent insurance agent to get quotes on term insurance. You could also do that if you went the more permanent route, universal whole life. You can get quotes from different companies to see what are the different costs associated with it from an underwriting standpoint, from a insurance rate standpoint. Now, a lot of that is going to be really dependent on what your actual specific results end up being for your health, because a lot of times with insurance, life insurance, they're going to want to do some blood work and talk to your doctors. There's some newer policies that don't require all of that. If you're young enough and healthy enough and meet kind of within their parameters, they maybe don't require all that underwriting, but a lot of them still do, and especially depending on how much you get. So you want to consider the cost and compare that. It's always good to compare costs to get an idea of if you're getting a good deal or not, or at least paying fair value. And then last thing is the time frame involved. So the last thing you want to consider is, what is the time frame involved? Is the insurance is the benefit that you're trying to cover, does that need to be for your whole life, or does it need to be for a 10-year period or a 30-year period? Because that's also going to impact the cost, but also impacts really how much coverage you should have. So if you're a young family just getting started out, you might need that 20 or 30 year period. But if you're at the end of your career heading towards retirement, maybe you only need 10 years of coverage, because once you're retired, then your income, you should hopefully have saved enough where your income is going to be covered from your savings, maybe Social Security, maybe pension. Some other scenarios where I see that is depending on pension benefits and Social Security, because Social Security, whenever your spouse passes, or if you pass away before your spouse does, you only get one Social Security benefit versus two. So there's some considerations there. So, anyways, life insurance, not the most fun conversation, but I see lots of misinformation, as the buzzword is said, online, and so I wanted to clarify some of that, especially for the Disney cast members that are looking at life insurance as a potential benefit for open enrollment here coming in the next few weeks. Life insurance certainly is an important tool to a financial plan, and making sure you have enough from an independent, objective voice is always a good idea, in my opinion. And so I'd be happy to work with you on that to see if you have the right amount of coverages, what type of coverages should you have, and then I can also have relationships with independent insurance agents that can then help you find the best product at the best price. So my name is Kyle Newell. I'm a fee-only financial planner here in the Winter Garden, Florida area. I serve clients all over the Central Florida, Orlando area. In person, I've got an office, or we can meet virtually or over the phone. And happy to meet with you. You can always drop me a comment or send me a chat, send me a message, give me a call. My website is newellwm.com, so NEWELLWM.com. We'd love for you to visit there and maybe schedule time to meet. I hope you have a wonderful day and take good care.